All right. Good morning, everybody. Welcome to today's open forum. Appreciate everybody coming in today. We are waiting on Paul to get here, but I can get started with a few other things. Um, I just shared in chat a video. Please watch it later. I have not watched it yet. I watched the first 30 seconds of it, but that Yolanda sent me. And it is regarding what we talked about last week, the bill, the property tax bill and stuff. So watch that at your leisure. I don't even know how long it is. I just watched the first couple of minutes. They promised a fair and balanced, good, bad, and ugly thing, and then I said that's probably fine. So I've shared it with you guys. I haven't watched the whole thing yet, but there's a video to go along with it, and I sent you guys all the slideshow that was presented last week. So in case you missed that, Anita presented a great slideshow. She didn't really add much to what was on there, so if you just read that, you pretty much saw the whole thing. She did not want to be recorded and distributed for that, so any attorney type people we have on here, they never want to be recorded. So I don't blame them, because anything they say could be construed as legal advice or something like that. So occasionally they don't mind, but sometimes they would rather not be published. So do you guys have any other questions? Let's talk about this before Paul gets here, assuming that he is on his way, and I do not see him yet. He's not. I see that Nikki is talking in the chat about a service that she's using, Top Producer, and she's asking if anyone's tried all the leads. We have a relationship with Top Producer that gets you a discount. I don't know what happened with their no luck getting set up and no customer service after signing the agreement. I'm surprised to hear that. I think they're owned by Move, who owns Realtor.com and all that stuff. I'm not sure if they're still owned by them. But I'm sorry that didn't work out. If any of you guys have any input for her, that would be great. There's so many programs out there. I don't know what all the leads is, but there are so many programs out there right now. All right. Well, we can go over a market report. I don't know what's keeping Paul, but we'll go over a market report here. You guys have any questions for me? Rudy is here. Rudy, what's going on with you? Tell us what you got going on.
Good morning, everyone.
Good morning.
Well, I still have 2 units left for Lakeside, Kissimmee. It's called Soho at Lakeside in Kissimmee. 2 beautiful townhomes, 3 bedrooms, 2.5 baths, $359,000 with $25,000 on incentive. 3% commission for my fellow realtors. We're there every day, Sunday after 12. I'm gonna type the address on the messages. It's 2109 Broome Street. It is extremely well located. It's right next to the Turnpike, 182 Valencia College. So thank you, Ryan.
You bet, man. You bet. Anything else exciting happening with your team?
Huh?
What else is going on with your team?
Well, no, we are visiting. For example, tomorrow we're going to Haines City on Winter Haven. We're going to be visiting a community in Lennar, Maronda Homes. Everybody's welcome to join 11 a.m. If you need the address, just please send me a message. I'll be more than happy to send it to you. One of the reasons why we're visiting those communities tomorrow is because they have houses starting at $235. So 3-bedroom, 2-bathroom, 1,600 square foot houses for $240. I think that's amazing, including incentives. So,
oh, fantastic!
Where is that?
That is going to be in Haines City, Hamilton Bluff, which is Winter Haven. Lennar and Maronda Homes in Haines City. The Maronda Homes, the community, it is called Crosswind. And
So,
Lennar is Hamilton Bluff.
Yolanda, you're welcome to go with them because
Yep.
you guys do these all the time, right, Rudy? How
At
often?
11 a.m. Yes, 11 a.m.
But
tomorrow.
how frequently do you do them? These
I'm
trips?
sorry, what?
How frequently do you take the trips to the when you go see communities like kind of
Every-
almost a caravan?
We go every week.
Okay. What day do you go every week?
Mostly Thursdays.
Okay. And how would somebody contact you if they want to go?
Oh, let me type my phone number. It's 305-454-7821.
Hold on one second. I'll type it in there for you, buddy.
Oh, okay. Thank you. Yeah, feel free texting me or send me a WhatsApp, and I'll be more than happy to send you all the information, either if you want to go with us or if you want to go later. We are always visiting communities and learning about incentive and prices. All right.
All right. 305
454
7821. Got it.
7821. Thank you.
Got it.
Thank you, Ryan.
You bet. And so they go do this a lot. Rudy, if you want to follow up with a post on our Facebook page, that people see that as well, and I think that would probably be good.
Okay.
Let them know what you're doing and how to get a hold of you and how to get involved in that, because we'd love to have you guys go see these new communities and stuff like that. Especially that is unusual to see anything new starting in the low 200s, under 250.
Mm-hmm.
That's crazy.
It is
and they
crazy.
probably have incentives and stuff like that too. So
Yep.
that's fantastic.
And Lennar is paying 5% commission until July 31st.
Wow. Okay. There you go. Perfect. Great. Do you guys have any other questions or comments? Anybody want to talk about anything? Mama, we still need to talk. I want to talk to you guys. I have a couple of you guys, Marissa Bell, I don't know if she's in here. Omaima, I know a couple of people want to talk about kicking up their business and want to do it on a more individual level. I may have you guys come in, but maybe, 3 at a time to discuss where to go from here as far as getting leads and stuff like that. We've been talking about leads, where to find them, how to get them, what's a good ROI and what's not. And of course, it's different for everybody. Some of you guys have full-time jobs and you can't respond immediately to leads, and that's okay. There are programs for you as well. What we don't want to do is spend our money on things that require immediate response when you can't do it, right? So you're sitting in your day job and you can't do it. Other people have all the time in the world, and they can jump right on them, and those kind of leads will be better for them. So, it needs to work for your style, and that's what we talked about a couple of weeks ago, the training about which ones are going to have the best ROI for you. It depends on your style, and it's going to be different. What works for Tammy, what works for Rudy, what works for me would be different from what works for Nikki or for Marissa Bell or whomever. So, yeah, I'd like to get a couple of you at a time. If Marissa Bell and Omaima and Nikki want to do that, that's fine. We can do that. I can do it tomorrow. We can do it next Monday or Tuesday, whatever you want. Yeah, Omaima, you're in. I already counted you. And then I can do one for 3 or 4 people, and then I can do another one for 3 or 4 people on Monday or Tuesday or whatever. A little bit of personalized coaching, I guess, if you want to call it that. I'll just be guiding you kind of like in the direction to go for that kind of stuff. So if you want to get involved in that on an individual basis, that's great. If you guys feel more comfortable, I know if you're in this training, obviously you can understand English, and I know I talk pretty fast sometimes. If you guys feel more comfortable in Spanish, Rudy does stuff in Spanish as well, and Rudy can help guide you on that as well. Rudy also offers mentoring in Spanish if you guys would like to get mentored in Spanish as well, or English. His English is, okay. But I appreciate that opportunity that Rudy provides you guys. So if you guys want some coaching in English or Spanish, Rudy has done a ton of business, and he's a really good agent. Some of our agents are comfortable mentoring, and some aren't. If you guys are, I do have some agents who are interested in mentoring. If I have some more seasoned agents, more experienced agents who would like to offer to help them for a percentage, then let me know. We have that program as well. We actually have little sheets that you guys can, and we've had them for 7 or 8 years now, where you guys can fill in the agent A is going to help agent B in this regard. Agent A is going to do this, 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 and this as a mentor. Agent B is going to do this, 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 and this as a protege. Agent A gets certain percentage. So everything is spelled out, so we don't have you guys fighting later about, Tammy was my mentor, but she only, I couldn't get her on the phone and blah, blah, blah. You have certain set things that the mentor does. Usually it's just reviewing your marketing, reviewing your contracts when they come in, etc., or when you're writing a contract. Depends on what side you're on. So mentors help like that. You guys can use that sheet or come up with your own. Fine by me. So let's do that with those people. I'm still waiting on Paul, and I assume he has some kind of emergency because I do not see him still. And he had a lot to tell you guys. So I will tell you what Paul and I talked about a little bit. We talked about Hometown Heroes is coming back. They're getting refunded, funded. They're coming back out with some more money. We talked a little bit about this, the property tax thing and what that'll mean for those, but I want him to tell you guys that. I don't want to jump him on that. I'll tell you that, anything that saves you a couple $1,000s on your escrow is going to make your payments lower, make you be able to afford more house. So that's good. And so we were going to discuss that, but I don't have much planned for you guys. Just ask me questions. Let's do this. What do you guys want? If you could talk
Ryan,
to you. Yes,
Ryan,
sir.
I just want to make a comment about Hometown Hero.
Yes.
It does work very well, but when you want to use Hometown Hero as an option for your client, you need to start applying right now. You need to talk to your lender and start applying and building, all the documents that they need. So when the Hometown Hero comes available, they already have everything in place. Is the best way to do it.
Yeah, and what I'll ask all you guys to do, that's great advice, Rudy, thank you. And what I'll ask all you guys to do too is Google Hometown Heroes, AI it, do whatever, and be ready to answer questions for your clients. Do I owe that money back? Do I do that? When do I pay that money back? What if I sell within a year? What if I sell? Know those questions, guys. You're the expert. I'm telling you right now to Google it. I don't know when rules change and stuff like that. I'm not out there doing it with you guys, but before I would talk to any kind of client who I thought had a problem qualifying, I'm going to know what we're offering in certain counties, and I'm going to know what Hometown Heroes means. So down payment, learn what your DPA is in any county that you work in, know what the down payment assistant looks like, and know what Hometown Heroes looks like. If they would qualify, they changed all the qualifications for it. I'm sure they're probably doing it with each batch. It seems like they change qualifications or they change something because they're like, well, we're running out too quick when we offer it to everybody. So we got to start narrowing it down some. And then, they are definitely, oh, Paul's here. Thank goodness. I'll let Paul finish all of this stuff. But Paul, are you here? I see your.
Yes.
There you are.
I am.
All right. There you are. All right, bud. Well, appreciate you coming in. I shouldn't have done it so early in the morning. I know you get up about this time. So
I've had a busy morning for sure.
I'm sure, but all right. So we talked a little bit about, I'll go ahead and bring you in here. I was telling them what we were going to talk about, but Hometown Heroes.
Yes. So Hometown Heroes, and I hope I'm not being repetitive. The 2026 budget allocation is $50 million. So to kind of put that in perspective, the money last year went pretty slow. I think it'll last 4 to 6 months. So the only thing I can't say is if the appetite's any different this year than it was last year. None of the guidelines have changed so far. Okay. So if you're not a Hometown Hero, money's not for you. Okay. Years previous, it was available for any, even with that name. So 50 million, the first day we can reserve funds is July 13th. So write that down. The earliest closing date is July 17th. Okay. Do me or anybody a favor that you're working with. Don't schedule a closing on the 17th. Earliest I would schedule a closing is the 20th, the 25th through whenever, because this is our government at work. So any delays and you have a closing scheduled too early, you're going to get caught, right? There's still other Florida housing down payment assistance programs for everybody else where you can get up to $10,000. Orange County still has a program where, depending on your income level, you can get up to $40,000. So just depends where you want to be. So Hometown Heroes is great, but it's not for everybody, but there are some other programs. Did anybody have any down payment assistance related questions?
I do. Hi,
Okay.
Paul. This is
Hi.
Rudy Morales. How are you?
I'm good.
Talking about the down payment assistance, you only have down payment assistance through the counties, or you have something else going on?
So there's 3 types of down payment assistance. There's Hometown Heroes or Florida Housing, which is called bond technically, okay? Not to confuse the heck out of everybody. Then depending on where the person wants to purchase, there are individual down payment assistance programs. And through some of the agencies like FHA, there are some 1% down options, but those are heavy in the fees. So it's you may be getting a 1% discount at the end of the day, but it's not as advertised. So yeah, it just depends where the buyer wants to end up for sure.
Paul, which of these programs are? I have a question from the chat. Which ones are for first-time home buyers, and which ones are for everybody?
They're all for first-time home buyers. None of them are for everybody.
Okay, so Hometown Heroes and all the DPAs, county DPAs.
Yeah, the only people that get off the hook for first-time home buyers are veterans, but it really doesn't matter because veterans are doing 100% financing anyway. So it's kind of,
Right. So what resets me for first-time home buyer? Is there any reset?
Yes. So if you have not owned a home in the last 3 years, then you are a first-time home buyer. Let's say you own a home right now in Connecticut. You are not a first-time home buyer. It doesn't matter where it is. If you're on the deed of a property, you're not getting it. So, and the way that they check that, because we've had people do this before, is they're going to get 3 years of tax returns. So if there is $1 in mortgage interest written off, not happening. So also, let's say that you have a property that's you're on the deed for, and there's a few people in your family that are on the deed for it, and you're not claiming any mortgage interest. These lenders are like the NSA. They will know. They are going to run LexisNexis legal searches on you, and they'll pull up any deed for any property that you're on anywhere in the country.
Okay, it has to be a home. If it's land or something, that doesn't matter, right?
Correct.
Okay, so if my grandpa passed away and left me and my 3 brothers an old house in Michigan, I'm a quarter of that, never lived there. We're just renting it out or doing whatever. I'm still a homeowner.
Yeah. I'll let me double check inheritance with the new HTH
I
guideline.
don't need to get you down a hole. I didn't mean to take you down.
It has. That is a weird one that's changed. So lump sum payments from insurance, settlements, disability, Social Security, lottery winnings, or inheritance is not considered income. So we know that part. But yeah, if you're on the deed of property, you're a homeowner.
That's interesting. Okay, that was just my curiosity.
That is a question that you would ask for sure.
What credit score do they need to have?
For Hometown Heroes, you need a 640. For Orange County down payment assistance, you need, I think it's a 620, but let me look. I love Orange County. It's so fast. And also the thing that I like about Orange County is the interest rates are not determined by the state or by bond. Okay, Florida Housing. Where Florida Housing, like if they come out on July 13th and they say the rates are 8% for this program, not that they're going to do that, but then they're 8%. It doesn't matter what lender you're talking to. They're all dictated by the state. And they're always going to be a little bit higher. So, but yeah, so for, let's see, score for Orange County, 620. I was right. And with Orange County, if your income level is 36,900 or below, which not going to happen very often, you can get up. That's a one household individual, one person, that you can get up to $70,000 from Orange County. If you're at 59,000 or below, you can get 40,000 from Orange County, and if you're 88,560 or below, you can get up to 10,000 from Orange County.
What's the payback on that?
There is no payback. It's just 10%. It's just there is a this is better than Hometown Heroes too. There's a certain amount forgiven every year. So every year that you own the home, 10% of that balance is forgiven.
Okay.
Anybody know what it is for Hometown Heroes? It's 0%.
Okay. Yeah, you always go back Hometown Heroes, right?
Exactly. Yep.
Okay.
Yeah. So Orange County's pretty aggressive and pretty good.
Off the top of your head, you know anything about Osceola County?
I don't think there is any funds left in Osceola County. Still.
Okay. And that's been that way for a while.
It's been that way for a long time. Yeah, let's see. Okay. It looks like there is some funding now. It's called SHIP. Okay. It's the income limits are less than Orange County. So I could send that out to you guys too. But basically, I mean, the difference is that lower tier, instead of being 36,000, it's 22,000, which I don't know what properties they're going to find with that income level. 50% is going to be, that's the very low income. That's 36,000, and then 59,000 is the higher one. So
yeah, the problem comes into these big money ones is I can't buy a house if that's my income.
Yeah, so basically with the reason that we don't even talk about Osceola is if somebody wanted Osceola, chances are they're going to make up to that $59,000 mark, and we can just go with the Florida housing product, and then they can make up to 80,000 and get the same amount of assistance.
Okay. What are you doing on regular FHA? What are you doing credit scores?
We don't have
a credit score for me at your time because there's so much misinformation out there. So
it's probably one of the FHA and VA are probably one of the most misconceived credit score things that you find. FHA and VA, they don't care at all, period. There is no minimum credit score requirement. When we get an application for FHA or VA, we have to run it through a system called DU, Desktop Underwriter, right? Some listing agents will ask for that when we issue a pre-approval letter. So that automated approval system is either going to tell us one of three things. It's going to tell us, yes, we love this person, that's approved eligible. It's going to tell us, no, we don't like this person, which is called refer with caution. Or it's going to say refer eligible, which means maybe. If it's maybe, then it's underwriter discretion. And there's rules on max debt to income ratio, stuff like that. You can always Google, FHA manual underwrite guidelines, but there are no credit score requirements. So we've closed 3.5% down deals with FHA with 530 credit scores. So don't ever, if a lender tells you a common one, I would say 75% of lenders are at 580. So a lot of realtors think 580 is the answer, but it's not.
All right. Everybody's going to want to know about Seminole County, Lake County, Volusia County. They're going to all those things. Should they just contact you individually or?
Yes, for sure.
Okay.
Most of the time with Volusia is no. Lake, there are some funds, but they're pretty hard to get.
Okay. Similar to Osceola then?
Yeah, absolutely. Maybe worse. Yeah.
Okay. Spanish-speaking lenders, I know you have them, loan officers. What do you want to give us a contact or something for those as well?
Yes, I will.
They can contact you and you'll send them.
Yeah, I could throw it in the chat too, for sure. So we have guys that speak Spanish. Obviously, we have guys that speak Portuguese and French.
Okay. Malvis, you have a question? Okay.
Did somebody have a question?
Malvis did, but she's still muted, so I don't know if she might have hit it by accident. Yes, 3 years, it resets. And now she's gone completely. Sometimes they can't get their mute unstuck and they have to log off and log back on. Anybody else have a question?
Sorry.
Oh, there you go.
I just sent Lewis's information in the chat as well.
Okay.
But you can always reach out to me on anything, but Lewis is he's one of our Spanish speaking loan officers.
Okay. What does I was going to ask you this. What does this proposed? So last week we had a presentation on the proposed property tax thing, where it looks like a regular house is going to save, I don't know, $2,000 a year, let's say.
Mm-hmm.
Is that as easy to figure out as it's going to be about $180 a month off of your mortgage because the escrow is going to go down $2,000 a year? Or what? I didn't even do the math on that.
So first of all, give you some credit, Ryan. Your email on that was the most thorough one that I've seen.
That wasn't my thing. That was Anita, who was from the Closing City, came in last week.
Well, it made you look good at the end of the day. So at the end of the day, no lender is going to buy that immediately, right? So we don't know yet how it's going to change on the county's websites for their calculators, right? But initially, there's not a lender in the country that's going to go off of that new homestead exemption and just do it that way. They're going to go off what the taxes are now. So this is going to help buyers in the future, but not November 5th or whenever, not right afterwards by any means.
Right. So you're not going to say, well, you can't afford this house now, but in 2 years you will be able to. So you're approved.
Correct. Exactly.
Right.
Because what if it changes? Yeah.
So, but they are going to, even if whatever they're doing with you, assuming they qualify for a house now at a certain payment, their payment is still going to go down in a couple of years.
Yeah, absolutely. It will help with affordability. It's just not going to happen this year.
Right. Right. Well, they won't even see anything till the end of 2027.
Exactly.
The full thing not till the end of 2028. Okay.
Yeah.
So we'll bring their payment down, but you're not going to give them any credit for that, obviously, until not you, but the lending industry until it happens. That makes sense. I mean, you still have to make your first 2 years payments.
Yeah. And then also we don't know what's going to happen with all the other taxes, right? Because those are still going to exist. So are those going to be rate? Like what's going to be what's that going to look like?
Right. Okay. Any other questions for Paul? Paul, what's going on with you? What can you tell us about?
We could talk jobs report 48 hours ago aside. I'm surprised you haven't given me a hard time about that yet, Ryan. Interest rates have been coming down dramatically the last 2 days, not so much. But we've lost a little bit of the ground we gained, but we're still like mid sixes, which is good, like 6.375 ish, which isn't bad. So that's good. There's a lot more competition right now on the equity line side of things. So where that matters to you guys is people that are doing have a home to sell and they need some of that equity to tap into before they buy. We can utilize a lot of that equity before they buy. So by the time they want to purchase, they don't have to put in an offer with a contingency is what I'm trying to say. We also have a few bridge programs that's pretty popular during the summer. So that's something I want you guys to reach out to me individually, but essentially those programs work where we do not have to count the payment from the departing residents against the buyer's debt to income ratio.
Okay, cool.
Yeah.
And you find that to be very useful.
Yes. The other thing I want you to put me on the calendar for next month is we're working on forward commitments. I don't know if any of you guys have ever heard that before, but essentially what it means is it's like a builder. When a builder goes out and purchases money at 4.99% and no other lender can offer that, right? Well, we've talked to a few investors that will let us purchase a chunk of money at 4.99%, for example. And we want to figure out a way compliantly where we can offer that to you guys on your listings. So if you have a listing that's not moving in the past, and I've said it on these calls, is, oh, hey, we'll do like a 1% to 2% lender credit. But I don't know about you guys, but that doesn't seem to be moving the needle very much, right? So we want to try to offer something that's a little more attractive, where it will cost your seller some money, but it might be a lot less than a price reduction.
Okay. For those of you who aren't aware, Paul, will you share your contact info in the chat, how you want people to contact you? And I'm going to share this screen. So what Paul is talking about, me giving him a hard time about the rates, is it's just an ongoing joke between us that I can shoot the messenger on the rates every time, but I do give credit when the rates get good. But This is today's report. Anytime more than half of them are going up, once in a while I'll reach out to Paul, let him know what I think of them. And when they come down, I tell them good job. But this is what we're looking at. This is what yesterday's looked like too. Now the numbers you see on here, Paul always tells me he can do better than these. These are national averages, I guess, Paul?
Yes, correct.
And you can pretty much beat these like this.
Yeah, absolutely. This is just a good idea of where they're at for everybody. Yeah.
But for example, what you can do, the FHA, it's 6.3. What do I actually get on that?
So FHA, so I could be in the fives on FHA, like 5.85. I could be about with FHA or any government, so VA too, I can typically be 3/8 of a point to a half a point lower than what you see. Conforming which is conventional financing, guys, it's pretty close. I could be maybe an eighth better, but there's not as much margin in those deals. So it's not as easy to be more competitive on this.
Okay. Are you seeing USDA deals?
No.
Okay.
I haven't done a USDA deal in a while. I have a couple people on my team that will. Another thing that I'll tell you guys about is, I don't know if you guys have ever heard of HomeBot. I don't know if they've ever approached your office.
I've never heard of them.
Okay. It's pretty dynamic. They've been around for about 10 years, and they offer a lot more information. They kind of group into I'm going to say this the wrong way, but they group into the software that you guys use to send out your listings. But it provides a lot of financing information and a lot of other information on it. So I'll roll that out to you, and then post-closing, it sends the borrower a report monthly on home value. It's pretty dynamic, and you can see their open rate with it. And then it links back to you and your listings as well. So if you see activity on there, you'll know when it's the right time to call someone.
Okay, cool.
So we've been circling the wagons for a while on that. I think for agents, what it'll do is your first 100 clients that you put in there doesn't cost you anything. But then after that, depending on your database and how many people you load in there from past closings, there is a charge, but it's not. It's like less than $50 a month. It's significantly less than that. So it's just whether or not you see the value in it.
Okay, cool. So I'm having you on next month to talk about what thing? That thing?
Forward commitments, hopefully. Yeah.
Okay, wonderful.
Yeah, that gives me a month to figure out which investor and what it's going to look like.
Okay, fantastic.
What other I'm just curious from you guys, because sometimes I just speak about things, but I don't know if it's necessarily the headaches that you guys are seeing. So can anybody give me a couple that they're seeing in the market with their buyers, as far as whether it's getting offers accepted, getting buyers pre-approved, those two things? Any couple things that you guys are seeing and running into a problem on that front?
I'm not running into a problem, but the one that we've been doing a lot is the VOE, verification of employment loan.
Okay. So what kind of issues are you running into with that?
No, I'm not having issues. I'm saying that it's working out very well for us.
Okay. So there is a lot of lenders don't do this, but there's a thing called day one certainty that Fannie Mae rolled out. Gosh, it's been 5 years ago, where a lot of times the lender doesn't even need those things. So what that does essentially is it just avoids potential issues that come up during the process. So the days of getting 30 days of pay stubs and 2 years W-2s, if your lender's asking for that on a conventional mortgage, they're not reading their findings, which is the DU approval that we talked about earlier. So just make sure they're not over documenting your client, because it can matter if they provide something that is contradictory to what was entered when the approval was run. So, and most verifications of employment are now automated too. Those cost the lenders money to order, but it's better than having to contact, Sue Smith and HR and wait a week for one,
Right. Christina has a question.
Hey guys, how are you? I'm curious if you're seeing any, or what type of products you have for, I saw somebody comment that they did something that was almost like they were going to be purchasing a home for like an elderly family member. They said there was a name for the program. I can't remember it. Do you know what I'm talking about, Paul?
I do. So let me pull it up real quick. It has to be a parent, okay? Or it can be a parent for like a disabled child, okay? Some people call it a family opportunity mortgage.
Yeah, I think that's what I'm talking about. Yep.
To be honest with you, that's just a marketing name. That's Fannie Mae doesn't call it anything, okay? It's just part of what you can do, and it's been around forever. So sometimes people think it's new, but it's absolutely nothing new, okay? So you can purchase a home for a parent, and you can purchase it as a second primary residence. So same rates as a primary home, same everything, okay? And if you have a child that is unable to work, then you can do it that way too, and go from there. Sorry, guys. Somebody's at my door. Go ahead.
What does that look like in terms of qualification, down payment? Is it an FA? Is it like a government backed?
It's a standard conventional Ginnie Mae loan. Hold on one second, guys. Sorry, I'll be right back. Unprofessional. I apologize.
Okay, you guys have. So HomeBot is what he'll be discussing next month. On mine.
I've seen it. I like it. The only thing that I see with that is that because somebody I got signed up for that by some other lender that I don't even work with, but I don't know. They have me on their list, and the values are always pretty far off. So I don't know if that's a conversation starter or what. But I unsubscribed, so I was getting it for a while. It's interesting, and I like it if you want to be able to send people, estimates of their value and stay top of mind. The only thing is the numbers are pretty wrong, and at least in my case.
She's talking about HomeBot, Paul. I don't know if you want to get into that until next month, but another lender signed her up for it, and she found the values to be wonky, and she doesn't know if that's.
I'm honestly very interested in that, because that was one of my biggest concerns with them. So I had a long call with them yesterday, and my two big concerns were that, and if we sign somebody up, like if we sign one of your buyers up, when you refer them to us, it will start to send them listing information too. So my beef with that was, well, what if that's contradicting what you're sending them? Because the whole reason we want to do it is to add value, not to create conflict, right? So I'm waiting for some more information on that. Again, they've been around for a while and they've had great success with it, but I need to make sure that I understand literally everything. And if you can send me an example of that, I would love to see it.
I'll see if I might have trashed the email. So there was probably a 6-figure difference between what was estimating.
Did you say a 6-figure difference?
Yeah. Probably 80 to 100. I'll see if I can pull it up. I don't know if I just trashed it. But...
And I wonder if it's something that had to do with like an addition or a major upgrade, or I don't know, right? So I'm kind of interested in that for sure. So it's from what I've go ahead. Sorry.
Yeah, I mean, I have a 40-plus-year-old home. I definitely maybe with everything, but front and back of me, rental, in the range, and slightly higher. So definitely comp. That's interesting. I'm curious where they pull their data from. Like, are they looking at estimates, or is it an aggregation? That would be something
So,
I'd like to know.
so they use a program called Housing Canary. It's a back-end program that a lot of lenders use for their AVMs, for their home equity loans. So as far as like the grade of AVM that it's kind of associated with is very, very, very high, right? But it's not going to be perfect every time, obviously. So what I'm also curious about with that example is there's a confidence score on the back end. So if there was that big of a discrepancy, I wonder why it would spit it out if it had a really low confidence score. So that way those kind of things don't happen, right? But yeah, I'm certainly curious about it. So they use that, and they have a few more kind of proprietary internal AI type things that correspond with it, but that's the backbone of it. And that's what we use for all our automated annual stuff that we send out to past clients too. So it's proven that it's been the most consistent, but not perfect every time.
Did House Canary get purchased by Google? Is that a Google product?
I don't know, honestly. I don't think so. Let me see. I just Googled that, and I don't see that it was purchased by Google, but I've just been looking at it for a second. Let me see. Yeah, it says Housing Canary has not been purchased by another company. It remains independent.
Paul, what do you see? I'm having a lot of everything else is as well. I'm running into a lot of issues with condos. I had a listing that expired, and now, we're not relisting because I don't know what to do about it. Have the association fix the insurance issue. So the association decided to not renew their sinkhole insurance policy. And they have something, I think it's like there are two problems. When people try to get financing in this community, it was that, and then I think it's like the replacement cost value or something like that. There's two options there. You'll know what I'm saying. So
I will, yes. So what I would do this is the easiest way to do it. So on this one specifically, in any listing that you guys have, as a listing agent, for sure, send me the contact information for the HOA. And for you on this one, if you can send me the master insurance policy and the co-insurance, I'll just do what I can to get it approved up front.
Yeah, I have another one. That one she delisted, but I'll see if she can send me the information. I have another one where I've seen at least conventional sales close recently, but we were told by another agent that his owner had done the work because they had like an FHA buyer. They ultimately sold to a conventional buyer, but he said they had done the work to get the association approved, but it's been months and I don't see it on the HUD.gov website. So I don't know if I can send you the information for that. I don't know if there's any way around the condo questionnaire to figure out if it's going to qualify for like a big one.
If it was Fannie Mae approved, it will never be on the HUD website unless it was also FHA approved.
Right. He was saying they had, done the work to get an FHA VA approved. So, nobody, we haven't had anybody get as far as to order a condo questionnaire. But I'm assuming we would need that to really know if it could.
Yeah, and where it gets kind of sticky with conventional too, is if let's say it was approved in January of this year, but they redo the budget in March, they're going to have that expiration date, and we're still going to have to look at that new budget and make sure it didn't get worse. Something didn't change for the worse. What's the name of the condo? I'm just curious.
Clubside at Sable Point.
Clubside at Sable Point?
Mm-hmm. So really long way.
I'm just looking it up. And what city is that in?
It's Longwood.
Longwood, okay. Also, I apologize. I had to get up. Today's my girlfriend's birthday, guys, and I had a package delivered that I have to sign for. So I've been kind of freaking out about it all morning, and that's when of course, this is when it comes. All right, let's see. Sable. Okay, so there's Crown Point by the Springs. Okay, that's not it, right? Nothing to do with it. There's Crown Oaks. There's the Springs. That's it. So it's definitely not on the website.
Okay. But potentially they could do like a spot approval if the condo questionnaire comes back. We just need a condo questionnaire, right?
Yeah, I'm glad you mentioned that. So you can do a spot approval. Not all lenders do this either. You can do a spot approval on conventional or FHA. Okay. Some people think that if it's not an FHA approved list, then it's just not going to work. Yeah, you can do it on either one.
Okay, great. Thank you.
But definitely send me that insurance and I'll send it up for approval today.
Awesome. Thank you.
Also, I wanted to say I was pulling this up before we got interrupted before. So parents or legal guardian wanting to provide housing for their handicapped or disabled adult child, that's where it falls under for the parents buying the property as a primary residence. It's a lot looser for children wanting to provide housing for their parents. Like if I just said my, elderly father, Ryan Langley, doesn't work and can't afford this house, then I could just say that and not provide any income documentation for him and purchase it as a primary home.
And so that, if we were doing that, the person would just have to qualify for both of those payments
Exactly.
then.
Yep. And also, let's say that that's none of the case. I do a lot of non-occupant co-buyers, co-signers as parents as well, where if, let's say a kid just got out of college, for example, they have literally no income and mom or dad or both want to just be non-occupant co-borrowers, we can qualify them as a primary residence all day long.
I actually have one more question. I have some friends that are like newly retired and they have enough money to take what they want outright, but they're interested in looking at the option to maybe leverage and get a loan. They're not, well, I guess they don't have any income, right? I mean, they're not quite, I don't know that they're collecting Social Security yet. Any suggestions?
Yes. So I deal with these a lot. Okay. You're like, they might have $2 million in a Fidelity account, but they're not drawing any income. And the lender tells them they can't get a loan. It's kind of crazy, right? So in that case, if they're of retirement age, okay, so let's say that they're older than 62, then I can just take whatever's in their account, like say they have $2 million in a Fidelity account, and I can just create a letter from their financial advisor that says that they could draw from the account. And as long as whatever number they give me is I can document that it would continue for at least 3 years, I can use that as an income.
So they are 55 and 57. Are they too young to try that option?
Still an option, just not exactly that way. So in that case, we would do what's called asset depletion or asset dissipation. It's a Fannie Mae guideline as well. And we would take whatever they have and we would divide it by 240, which is 20 years. And we would use that as an income. There are other non-QM products, so not Fannie Mae, that are more aggressive. They'll do like a 5-year, but I don't know it just depends on whether we need that aggressive of a calculation or not. Does that make sense?
Yeah, that's great. And what was the one? I know it's not the official Fannie name. What was it called? The Opportunity Loan?
Oh yeah, I don't even know. It was they called it yeah, and that name is nonsense. It's some name that somebody came up with and said,
marketing.
Hey, it's Fannie Mae Family Opportunity Mortgage.
Okay.
But it's absolutely, if you ask Fannie Mae, if you called Fannie Mae, they would not know what you're talking about. Yeah.
And am I understanding it right? So it's essentially like a non-occupant co-borrower, but is that kind of what it really is?
Yeah. So it's a little better than that because you're buying it. Like, let's say that you're buying it for your mom. You're buying it. Your name's on the mortgage. Mom's nowhere on anything. But because it's for mom, you're able to buy it as a primary home.
Okay. Okay. Thank you.
Yeah,
Um,
exactly. So go ahead.
I want to remind you guys, Paul can also see everything in the chat. So Paul, I had a couple I had to erase out of there. How did this guy get a girlfriend? He's obviously lying. I had to erase a bunch of stuff out of the chat. So
Nice gifts, apparently. Yeah.
that
That you have to sign for. I didn't even know that was a thing.
Yeah, imaginary people have birthdays too.
Yeah, I gotcha.
All right. Any other questions for Paul? All right, Paul. I appreciate you coming in. I think you're wonderful.
Thank you.
I appreciate everything that you do. I would love to have you on next month to talk about what you discover with a couple of different things here and talk about the market in general. Hopefully we'll see some kind of relief on rates and et cetera when this war gets ended for the 38th time. Hopefully there will be some relief on the rates. And any other questions or comments for Paul?
I had one more. Of course, the media is always really helping our cause with their positive headlines these days. I saw people discussing, I mean, there's no crystal ball. They think that the Fed may actually raise rates. Is that, what are your thoughts?
There's an 80% chance that's going to happen. Last time everybody met and ran the numbers on this. So December is the target. I don't think it would be more than a quarter, but rates are tricky. Those are the overnight Fed funds rates. So it doesn't mean that mortgage rates are going to go up. Because of the positive outlook that would express, it could easily have the opposite effect. It's the most political answer I've ever given, but it's yes, there's a really good chance that could happen, but I don't think it's going to hurt us.
Okay. Thank you.
Awesome. And just so you guys know, I mean, I'm a kind of an economics guy. So gas prices drive everything. Gas prices are up, which puts inflation up, which scares the Fed. At least that's supposed to be their trigger for raising rates, is inflation getting out of control. So they've been lowering them so much because inflation has been coming down so much. And now with gas prices up, gas prices drive everything. So that's kind of where we're at. And so their automatic function is to hit the brakes when that happens. But like Paul told us several times, when they kept dropping, they drop a quarter, and our rates weren't going down that much.
Mm-hmm.
That it's not a direct effect on the rates.
Yeah.
So, and you're right, raising the rates typically means that they're afraid the economy is going to take off too fast and too much, and so they try to hit the brakes a little bit, which would be a good sign, something we haven't seen in a while. Go ahead.
Is anybody, like, I had tried to do something a couple years back with, like, advertising some listings with a lender matched, buy down of a rate where the seller was contributing, the lender was going to contribute, and they were offering, a nice rate. But I just didn't get any traction from that. And I just was curious if anybody on the call has done something similar, or if they've had any luck with marketing rates or contributions like that.
I would love to hear some positive feedback. I offer that all the time, and I very rarely get calls on it. But yeah, I mean, and we can even put the seller fees in seller pay closing costs where it doesn't affect the max, the guidelines that we have to follow for the maximum that can be bought down. So yeah, I didn't mean to interrupt on that, but if you ever need anything like that on your listing, we can do up to 2% to help out with whatever the seller's going to do. So please utilize us for stuff like that.
Thank you.
Awesome, guys. Paul, you're amazing. Thank you so much for coming in. Tell us a little bit about that, Paul. What the advantage of working with someone like you who can wiggle that kind of stuff. Tell us what the advantage is of that.
So the first thing is, when you're dealing with that, if you're dealing with somebody that works at like a retail lending operation, they can't sacrifice margin that they don't control. So we're a broker. So we really have complete control of the profitability of a loan. And the way that I look at possibly lending on a listing that you guys have is that's not ever going to be a buyer lead that we would have had anyway. So I don't care if we hit a home run on that deal or not. I just want to get on base. So typically what I'll do, as long as, and this is just giving you guys the raw data, as long as we can make $5,000 as a company, I don't care what percent that adds up to. Let's just get the thing done so we can make your listing look more attractive. So for example, you know, on a $450,000, you know, property that you're trying to sell, that represents, you know, what, 50 basis points, right? So, well, excuse me, 100 basis points. And on that case, like, as long as we can make that money, I'm good. And if our margin is normally 2.75%, right? So we would essentially be giving away 1.75% on that deal, which really, really, really can be used to drive the rate down about 3/4 of the point. So if the seller on top of that is willing to match what we're doing, now we're talking about an interest rate that's maybe 1.5 points lower than what the market bears. It can make that offer really attractive for a buyer.
Okay. So what are we putting in on our, first of all, I want to run everything by you before we tell them what we're putting in realtor remarks on this.
Yeah. So reach out to me first, because depending on the price point, that can be a lot more aggressive at a higher price point than a lower price point, right? So reach out to me and I'll tell you what we'd be willing to sacrifice on that deal, basically. And we'll assume that the average buyer is going to put 20% down. So that way, if they put a little bit less down, we're still profitable, right?
Mm-hmm.
So yeah, so that's just reach out to me on that and I'll tell you how much you can put in there. And you'll just put, you know, with agents, I have the exact wording for this, and it sounds better than what I'm about to say, but with seller's preferred lender, we can offer up to a total of X% towards a rate buy down,
Okay.
right? And then we can let the buyer choose whether they want that to be a permanent buy down or like a 2-1 buy down or a 3-2-1 buy down. They just depending on their specific needs.
Okay. And how they think the market is. If they think the market is going to be that they can refi in 3 years and get a much better rate, then they might as well do the 3-2-1.
What's good about the 3-2-1 too in that situation is, let's say that the market gets better in 2 years and they're going to refi anyway. Whatever portion of that buy down that they haven't used, because that buy down basically offsets their rate, their final rate every single month, they get that money back.
Okay.
Okay. So if between the seller and I, we contribute $12,000 and in a year they refi, right? They might have only used 4 of that $12,000. So they're going to get a check back for $8,000.
Okay. Excellent. Awesome. So you guys, if you have a listing, you want to sell, it's not moving, it's not doing whatever, talk to Paul and then advertise that. Use your social media to advertise these things. I would even advertise, I would find footage of people predicting that the rates are going to be raised in December, because people actually believe that is going to affect the mortgage rates directly. Say now's the time to buy. Rates are about to go up. So use those things. Any movement in the rates can be used for buyers, sellers, everything. You just have to frame it how you want to address people. But if you think, if they're if they're people are chatting about the theory that they're going to raise the Fed's going to raise the rates in December, then say, look, Fed's going to raise the rates in December. Don't tell them anything else about what that means, but Feds are going to raise the rates in December. Now's the time to buy, right? You've been waiting for rates to come down. Looks like, and share whatever news thing comes out says they're expecting this, rate Fed raise. So use that stuff to market. Any other, anything else you have, Paul? Anybody have anything else for Paul? Awesome. All right, guys. Let me know if you want to go over your marketing and lead generation and stuff like that on a more individual basis. I'm going to do it with those 3, maybe one more person whenever we set that up, probably Monday. And I'll start doing that with you guys if you want to on a more individual basis. Paul,
Sure,
thank you so much for
in.
coming in. And anything else you guys need from Paul, you can contact him. His information is in the chat. If you lose it, then ask Jeanette or I for it. Paul, thank you so much for coming in, man.
Thank you guys. Have a great day.
Enjoy your girlfriend's birthday, buddy.
I will. I'm trying.
Keep working on those rates. Bye, bud.
Bye.
Bye. All right. You guys have any questions for me? I guess I kind of gave you my sign-off address there. But if you need anything, let me know. If you want to go over your lead gen, you want to do something like that, let me know. and we will talk about one thing I want you guys to do. I want you guys to, how many of you guys, just give me a show of hands or something, or use your emojis, or if you're on camera, just raise your hand. How many of you guys are using one of the AI things all the time, like frequently? Like how many of you does it know things about? Like if I ask it something, if I say, tell me about the best car washes around, it's going to say the best car washes in your area of Orlando, or the blah, 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 blah. Like it knows where I live roughly. It knows what I do for a living. It does this. If you've asked it to make you I know some of you guys do the silly stuff on social media where you ask it to make a caricature of you. Mine was pretty funny. It's all about this kind of stuff. It's all about me training realtors. But if you guys do that, so here's what I want you to do. Knowing what you know about me, and I'm saying this is the prompt, and play with it. Knowing what you know about me and my habits and this and that, but also tell it, I'm the kind of person who can respond to leads immediately. I'm the kind of person who does this. I'm the kind of person who does that. I have a day job. I can rarely do this, blah, blah, blah. I don't have a lot of time for real estate. Make me a business plan that will help me sell. I sell, 6 houses a year now, or I sell whatever I sell, right? Make me a business plan that will help me double my sales. Make me a business plan, whatever, and give it more and more information. It will make you a business plan. Sometimes they're 12 pages, sometimes they're 20 pages, sometimes they're 5 pages. But have it make you a business plan. I'm going to do one right now, just based on whatever. But I'm going to do one based on me, the real me. But I'm not trying to do a business, but I'm going to have it make me a business plan based on my personality and my habits. You guys do that, especially Marissa Bell. Thank you for responding in the chat, especially those of you who are going to meet with me. I'd like for you to do that and print it out or have it ready when you meet with me about your lead gen and stuff like that, because it's going to talk to you about what you should be doing. If you hate cold calling, let it know that. If you hate, whatever it is that you like or hate, you won't do. There's certain things that, I know I won't do. Right. And so don't kid yourself. Let's find something that works for you. It's almost like a diet. If you know you're not going to stick to a certain diet, then find something you will stick with, because sticking with it is what matters. You might do an Atkins diet and lose 30 pounds in 2 months, and then you start eating carbs again and you gain it all back because you're going to start eating carbs again because you just love bread so much, or whatever your situation is. But this is for real estate, and this is for your living. And if you know you won't do certain habits, if you know you're not going to answer phone calls all times of the day, your family, listen, I'm not giving up my Saturday morning golf. So I know I'm not going to be a buyer's agent, right? I'm not going to go out there and show houses on Saturdays. I mean, that's me, but I'm not trying to do it for a living. But you guys have to make those decisions. Certain things you can and can't do. Look, I've got my children every weeknight, or whatever, just let it know. Have it make a business plan for you. All right. And if you need it more specific, say, include times of day I should be doing things. And these are my times I can't do things, stuff like that. And then assuming it works, I want to go over it with you, but follow up on it. Actually follow the plan. If it works. I'd like to see it. This is more out of my curiosity, and it's more for your information. And even if you don't adapt the whole thing, you can adapt parts of it and things that'll work for you. So that's just an exercise. I think that'll probably take you 15 minutes and hopefully come out with something good. I don't know. I'm doing mine on ChatGPT because it's the one I use the most. It just knows everything about me already. So, but I put it on high. There's a model of intelligence on the side of the bar. It says instant, medium, high. I normally keep mine on medium, but I'm putting this one on high just to see what it comes up with. So you guys, I'm just going to give you a little example of that. Right here where I put high. So instant, medium, high. And I chose high for this. I normally is on medium. But I just want to show you guys where that was. If you use ChatGPT, you can use whatever you want. All right, Tammy has a question.
Actually, it's not a question. I showed a house the other night, and it was an NBA player's house, and the listing agent he's got a lot of like high-end listings, and he told me that he does a lot on YouTube, but it's taken him 7 years to build his YouTube channel. Because I only have 500 followers, but he gets a lot of referrals off his YouTube channel. I just thought I would throw that out there for everybody.
Tammy, do you mind sharing his name?
I can. It was Scott, but I don't know his last name. He's got a listing. It was in Eagle Creek on what was the name of that street? Bromborough. So if you wanted to look up the listings on Bromborough, it was one of there's like 4 listings, but it was probably the 1.595, I think it was.
I don't know what makes you think that we can spell Bromborough or whatever that
BROMBOURGH, Bromborough, I think. Just put BROM in 32832 and it'll come up. And he just got his license during COVID, but he had a 15-year or 17-year digital marketing company before he got into this business. He's very personable. But yeah, he does a lot of YouTube videos, and I was like, oh my gosh. But he was rattling off his listings, 6 million, blah, blah. I was like, oh my gosh, it would be so nice. Are you looking it up? Because I can't see you driving.
I am, but I can't see. Yeah, I'm doing it on the side here. I don't see a Bromborough anywhere. Do you BROM?
BROM? I think that's what it was.
And it's
Eagle Creek. Yeah. Oh well, I can send it to you later. The name.
I'm just curious because when I hear of successful ones that are working, I like to see what they are and see.
Yeah. And he's very natural. He's very comfortable. You know.
Mm-hmm.
He's very successful.
Okay, good. Let me see if I can.
I'm pretty sure it's Bromborough.
Oh, there it is. Brom. It's BROM.
Yes, that's what I said, but maybe sound again. Yeah, Brom.
It did sound like, and I'm sorry, I saw Braun. Yeah, 1.45.
No, I don't. Maybe he lowered it. I think it was 1.5 something.
Okay, yeah. That's probably not him then.
It might be pending. Oh, he's probably pending because he was going to have somebody was putting an offer in. My people weren't interested.
I got everything on here.
Oh, you do?
Let's see this.
Oh, maybe he put some actually there's some cool screens that he had installed because it's an NBA player that's the houses and they do everything that it needs to have done. And it had these like cut out screened areas in the lanai. And he said, we're probably going to put these screens in that you can't see in, but the wind comes through them and stuff. So he sent me a picture of those. And so actually that's a product that's kind of cool out there that if you had like a hot tub area that you can put that screen in and it will block the view, but it still lets the light and the air in.
Nice. Okay.
It's probably in my contacts, but I'm driving and I probably can't find it.
Yeah.
So,
Send it to me later. Send it to me later because I want to see it. I love this kind of stuff.
Okay.
What's working for people. All right, guys. Thank you so much for everything. Anybody need anything, let me know, and I will see you guys soon. If you're one of the ones who want to meet for the to go over your lead generation stuff, let me know. Let's get together. All right. Thank you, guys. Thanks for coming in. I will see you next week.